What's going on, guys? Credit Solutionist here, fixmyficonow.com. I'm also the author of the 90-day rapid repair mini ebook, along with our other rapid repair products that you can purchase from the website at a deep discount at this time. All right, so today's live stream is not going to be too long. You see, I'm not even on camera. If I could be real with y'all, that's pretty much because I have my bonnet on today, and we twisted up. So yeah, we're not going to be on camera today, but the information I'm bringing is going to pretty much help you guys out. So I was thinking about a question somebody asked me on one of my last live streams where this particular person was asking me about how inflation is going to affect credit. So in tonight's live, I wanted to talk about that a little bit because if y'all haven't paid attention, look at your credit cards, today, log on to your credit card accounts because you may have noticed within maybe the last month, your interest rate has probably increased. Now that is due obviously to inflation. Now we know that inflation pretty much occurs when there's like an increase of the price of like goods and services. Which pretty much leads to like making the dollar have less value. Okay, so prices go up. Your dollar today doesn't mean the same thing that it meant a month ago. Okay, so it's pretty much kind of the same with credit. So I want to break that down to y'all a little bit right now. If you're just popping into the live stream or you catch the replay, be sure to leave a like and subscribe to the channel. Now, I started thinking about this because the Federal Reserve has pretty much been warning us all year that prices are going to surge and they're not going away anytime soon, and that they plan on raising the general interest rate for the country at least 3 times before 2022 is over. It's May 2nd, y'all. 3 more times? Well, dang, we only got 6.5, 7 months left in this year. That's pretty ridiculous. Now, a lot of people are up in arms because I'm part of one of these Facebook groups for Navy Federal Credit Union, and people were going nuts over there today because they opened up their credit card on their online accounts and they saw that their interest rate went higher. So some people say that inflation is good for the borrower and the lender. I beg to differ. I typically think that it is only good for the lender. Would you like to know why? All right, I'm going to go ahead and tell you. The reason that this is because the lender has the option of giving you an adjustable interest rate. So anytime that you sign a credit card agreement, you'll notice that they tell you that they can fluctuate your interest rate based on whatever the actual I forget the name of it, which is so sad because I'm a credit solutionist, but there's basically just like an annual percentage rate and it goes with the market rate of like whatever interest is at that time. So they give you these boundaries that you can be within, right? So they'll say, oh, your interest rate could be anywhere from 7.99 all the way up to 24.99. Okay, these are the times where you are probably going to be in that 24.99 range. Which sucks. Okay. So I want you to understand that that's what can happen when you borrow from lenders. However, if you use your thinker and you go and start thinking about creative ways to finance your life, you can still succeed in this realm. Okay. But back to the question. So the person, I don't know if I can put it up on the screen, but I'll see if I can. And if I can, I'll put the question up on the screen that the person asked her in the live stream, obviously blocking out their YouTube handle. But they asked the question, how is that going to affect credit? Well, here it is. If I borrowed $1,000 today, it would help me as the consumer because today that $1,000 wouldn't be worth what it was worth when I borrowed it initially. However, if I'm still making the same amount of money and my interest rate goes up, I'm not winning because the dollar is less, sure. But if I borrowed $1,000 at 15% and now the lender bumps it up to 24%, it doesn't matter that the dollar is worth less because the company that gives me the credit has the option to make sure that they are at least going to break even or still make a profit by raising my interest rate, right? Now, the only way that it can really help a borrower when inflation hits is if you start making more money. So, say I was making 20 bucks an hour when I got this $1,000 loan at 15%. Well, if I'm making 40 bucks an hour a month later and, the dollar is now worth less and I still have that $1,000 loan out there at whatever percentage it was when I first got it, well, then, yes, I am benefiting as the borrower. Okay. I hope that makes sense to you guys. If it doesn't, feel free to go to like a website like Investopedia. This information's all over the internet. Okay. So long story short, it's kind of like when you start to make more money, the way that you spend your money starts to increase as well. So it cancels out the fact that you made more money. Right? It's because your lifestyle creeps up as your money creeps up as well. The lenders know this about you, okay? And whatever happens with the Federal Reserve, that pretty much dictates what your bank is going to do with your debt, okay? And then they're also going to become more stringent with how they lend money out to you as the borrower, because they know that once the dollar becomes worth a lot less, what tends to happen is the price of goods goes up, obviously, to, make up for the missing pieces, so to speak. So they do that, they will raise the prices. And once they raise the prices, they know that you are going to start buying less. Not only are you going to start buying less, but you're going to start borrowing more. Okay, so this game is something that every lender, the Federal Reserve, they've all got a plan in place already to combat inflation. So I don't want you thinking that because inflation's happening, the bank is going to lose. No, you guys, the bank never loses. They never lose. Okay, now, the good thing about inflation, though, is that it does allow you to pay the lender back with money that's worth less than what it was originally worth when you borrowed. But like I said, the interest rate hiking on your credit card is something that is going to pretty much level that out to where the bank is still winning. Okay. So again, like I said, when inflation causes higher prices, the demand for credit totally increases and the bank is going to raise those interest rates. All right. So they're both both things are going to happen at the same time. But like I said, inflation is really not going to help your average borrower. Okay. The money supply is obviously an issue, right? Because if we're printing off paper money, the more we print off, obviously, the less that it actually is worth. We all know this, right? So I feel like I'm repeating myself here, but a lot of times, repetition is the mother of skill. I want you guys to get this in your head. So what I want you to do, look at your credit cards. I want you to compare your statement from, let's say, October of 2021 to May of 2022. You may have noticed that your interest rate did increase. So here's my recommendation for you. Start getting creative with how you're going to finance your journey, right? You want to purchase a home. Okay, here's one for you. I'm going to give you a free nugget here if you're still here listening. Let's say you want to buy a property that's under $100,000. And you're able to get approved for a personal loan or a personal line of credit that's around $50,000. There's nothing that says you can't go find a house in another state that is, the same amount, if not a little bit less than that personal loan that you got. And bam, you pull out the cash, you purchase the house cash, and that house is yours. Now, you do have to pay the personal loan back, but check this out. You're probably going to pay that loan off in about 5 years. Versus a 30-year mortgage, right? So if you're having a hard time getting a mortgage, you may qualify for other financing options that can still get you a home. Don't let inflation fool you into thinking that you can't do things that you want to do. There's always a will, and where there's a will, there's always a way. And, this is the year of intention for you guys, and we're here in Q2. It's time to get going, you guys. It's time to really get yourselves squared away and start thinking of non-conventional ways to get the things that you want. All right. So for the young man that sent me that question. I believe that inflation is going to affect credit in that the lenders are going to start lending less as the dollar, the value of the dollar decreases. But I think they're going to combat that by continuing to give credit products out with an adjustable interest rate. Okay. They'll never adjust it past the maximum that they tell you on the application. However, they will, whenever they decide to, they will basically charge you the maximum interest that is on, that was on your application at the time that you applied. Now, the other thing here is that if you do decide that you want to start borrowing, just know that today, the dollar is really not going to be worth what it would be, maybe December of this year. Or it could be actually worth even less. Because like I said, the Fed did say that they were going to raise interest rates, at least 3 more times before the end of the year. At any rate, I feel like I am sort of a babbling brook here, and I tend to be repeating myself. But like I said, the name of the game is, we're in quarter 2. Let's figure out creative ways to finance. Even if you have a group of friends and each one of you has $10,000, there's nothing that says you guys can't put that money together, even if it's credit. Pull the cash out. You guys go purchase some property, purchase some land somewhere. Okay. I have a good friend that's a real estate aficionado and investor. And he definitely says, hey, with real estate, you may not want to invest as a group. I say, hey, dude, some people are in the situation where they have to do that. All right. And there's nothing wrong with group economics. Just to kind of get sidetracked a little bit here, I do think in the Black community, not sure if we want to call it a community, but I do think that with Black people in general, group economics is going to be one of our saving graces as the years go on. So it is my hope that we can get that together. So this is not, one of those kind of live streams tonight where we're going to talk about race in depth or anything, because that's not what my channel is about. Because money doesn't have a color. Money, well, it does. It's green. And money doesn't care what hand it lands in. Okay. If that's, the one message that I want to leave you with tonight, money does not care whose hand it lands in. Okay. It's all about your intention when you get it in your hand. And the Federal Reserve knows what they want to do when they get your money in their hands. Okay. They want to take more of it. That is what they want to do. So it behooves you to do the most that you can with the dollar that you have today. Don't get so bent out of shape about how much that dollar is worth. All right. Just develop a plan around it, right? If your dollar is worth less in California and you work from home, you need to take your California wages and you need to move to Kansas. You know why? Because your dollar is going to go further in Kansas. Even though on a national level, your dollar means less, well, your $1,000 is going to go a lot further in Kansas or Mississippi or Detroit than it will in Los Angeles. All right. I mean, am I saying anything incorrect here? I mean, if I am, feel free to leave a comment if anybody's still here. But yeah, that's really where we are today. So get creative. Okay. That's what investors are doing right now. There's so many ways that people are, purchasing properties, investing. It's not all about the stock market. Of course, have your money there, have your Roth IRA, buy your bonds, do whatever you need to do. But, look for ways that are just different. Like yesterday, I think it was yesterday, I posted roof stock, because people say, oh, real estate's going up. Well, yeah, it is. But there's also resources out there that are showing you guys that no, there are still places that have $50,000 houses that have renters in them. If you can pay cash for that house using the personal loan method that I just talked to you about, that's income. You just bought a house cash. That's income. All right. You'll be getting the rent payments and you can use those rent payments. Obviously, you pocket a little bit, but you use those rent payments to pay off the personal loan. Like I said, paying off a house in 5 years because I did it with a personal loan instead of a mortgage that's 30 years. Come on, guys. Simple math here, okay? So if you're around people also that don't think this way, I implore you to subscribe to this channel. You know, get with like-minded people, because the channel itself is about credit, yes. But I am starting to see that other topics need to be discussed here as well. And I do plan on live streaming a lot more, as we talked about before. Now, you guys know we're in Virginia now. And we're still wrapping up getting the company, relocated from California and all that good stuff. And once we're back up and running for the credit repair portion, we're going to be helping y'all, because if you can't buy now, if you can't get approved for credit now, don't worry. You know, the market is looking kind of crazy right now. This is the time to be fixing your situation. You know, back in 2020, the people that had the money to fix their situation, they were doing it. Those are the people that are purchasing right now with cash. They have great credit, all that stuff. That's because they took the opportunity and saw, you know, they had that foresight into the future. That's why they're able to do the things today that you only wish you could do. And I don't say that to be facetious. There's things today that I wish I could do, right? But I can't because I didn't prepare 5 years ago. Okay? So I'm right in there with you guys with a lot of the stuff that I talk about on this channel. So don't get it twisted. Don't think that this is, you know, me dissing y'all or anything like that. You know, I remember listening to the YouTuber Erica Williams years ago talking about tax liens as a way to acquire real estate. Not only that, but it's a better option than putting your money in the bank. Reason being, the bank is only going to give you maybe a 0.2% return in your average savings account. Well, a tax lien, you purchase it and you can get up to, I think it's like 20% or something, or 16% in certain states. By the time you get your money back, you've made a 16%, profit. Or you may even get the house that you paid the taxes on. Because that's another thing that's happening right now with inflation. People are not paying their property taxes. So you know what you do? You swoop in and you pay the property taxes for them. And you know what happens next? They're then indebted to you. Not only indebted to you for the taxes, but they're indebted to you for the interest. Okay? That is your reward for swooping in and saving one of your fellow Americans, one of your fellow community members, right? What a wonderful way to stretch your dollar and put it to work during inflation, right? Okay. I mean, I sometimes even think, well, damn, maybe I need to spend $1,000 on a tax lien versus paying $6 for this loaf of bread that was $3 2 months ago. Maybe I could just eat a can of beans. Okay. Maybe I could do that. So that's what we're talking about here. It's starting to get a different mindset, right? And starting to move differently in your life. You owe it to yourself to do it. You know, your family, you just owe it. What hell? You owe it to the economy to be better, to do better, right? To start looking at life differently. Okay. So when inflation happens, which it's pretty much been happening my entire adult life, don't look at the doom and gloom. Okay. You got to look at the things that, you know, you have to kind of be like I don't know, like, I can't even think of an example right now, but the point is you need to see over the horizon. Okay. You need to not be in the same arena with the people that are all about this fear mongering. That's what we want to stop, because see that the fear is just meant to make you freeze. That's what the fear is there to do. Make you freeze. And when you freeze, you know that you don't look ahead, you don't look behind, you're just stuck, right? You can't even think straight. And imagine if all of your friends and your family are that way too. You guys are going to be stuck, frozen in time with your hand out to the federal government. And that's not where you want to be right now. So if you have a lot of debt, start to pay it down. Look for creative ways. Do the snowball method, you know, or the avalanche, whatever you can afford right now. But get it done. Because if the dollar doesn't mean anything, well, then you might as well just pay your bills anyway. Okay? Because like I said, the lender is going to adjust their interest to make sure that they continuously get a profit from you. Right? That's what they're going to do. So you got to look at your life that way too. How can I benefit from this? Like I said, if I can't get a mortgage, okay, cool. But what's another way I can do it? I was just driving down the road the other day going to Walmart. Most beautiful drive ever. I've never had to drive through, beautiful green hills to get to Walmart in my life. Now that I live in Virginia, it's an everyday thing, right? But I saw, a sign for real estate that was off the road that said for sale by owner. Does that sound like I need to finance anything? No, a lot of times for sale by owner just means put $2,000 down, pay the owner $200 a month until the real estate's paid off. Of course, you do your due diligence. You check, the deeds and all that kind of stuff. Well, deeds, then there's not more than one, but you check the deed, you check the taxes on it. You look land rights, water rights, all that stuff. Okay, you guys know about that. Okay, and if you don't, read up on it. But you do your due diligence. Okay, everything doesn't have to be done through the bank. Okay, the only thing you're responsible to do right now, if you're low on cash and you have a car, get in your car, do Uber, start delivering food. Do what you need to do. Okay, do something different. Because as the dollar goes down, it means you're going to have to make more money. All right. Like I said, the for sale by owner thing, there's a reason that owner doesn't want to use an agent, right? Because they found an alternative method to sell their real estate. That's a person that probably knows what they're doing. Or it could be somebody that inherited the property and wants to take it off of their own hands, right? Could be somebody that purchased it last year. And now they see that maybe, they have a renter that doesn't want to pay, whatever, for whatever reason, the owner wants to let it go and it's owner. It could possibly be owner financing. So anyway, I do feel as though I've probably talked your ears off. I didn't mean for this to be a super long live, but go backwards in time and look at the video I posted yesterday for roof stock. Okay, so that's more for the people that are, you can be a savvy real estate investor, or you can be somebody that's going to be like me, who's new to the whole real estate game and looking for creative financing options. That's what I'm going to use roof stock for. Go play on the website, get familiar. Even with the tax liens, you can go to certain counties' websites and you can play around and, bid on properties because they want you to be comfortable. The cities and the counties you guys live in, they're giving this stuff away. They're giving you free money. You do have to invest a little bit to get something back, right? Because as you know, there is no reward without risk, right? A lot of people think, oh, I only have to put $50 up and I want to get $100 back. That's not how it works. It's more like I got to put up 1,000 and then get 1,100 back. Okay. It's small increments, right? If you don't have a lot of money, you invest in small increments. But if you have to invest in smaller increments, you have to go with options that are going to give you bigger returns. Okay. The days of your money sitting in the bank, those days are over, unless it's a Roth IRA, unless, it's maybe some kind of trust account that most trusts are connected to bank accounts, but it's like, you have to start looking for creative ways. Okay. Get yourself educated, go on Amazon.com, buy some books. I have the one that Erica recommended years ago, the 16% Solution. Amazing book, right? And even I've tried to bid on tax liens and it is hard, y'all. I'm not going to front on you. It's hard. And you got to have at least $1,000 to do it if you're going to do it online. It's hard because now you have these large companies that have the hard money, the cash money. They can outbid you. It's true. It's true. But the United States is a very big place. Okay. And you can also go down to, I believe it's the county clerk's office, and you can get properties or liens that are behind the desk. There's like a term they have for it, but it's the properties that aren't listed on the website to bid. But you have to physically go down there. So you see what I'm saying? It takes a little bit of elbow grease to get some of the things that you guys are going to want. Okay. Everything's not on YouTube. YouTube is kind of just a source. Even my channel, it's a source that you come to, and, every now and then you're going to hear an idea. Like I dropped one during this video that I hope you guys heard, but you're going to hear, a person drop a gem every now and then that could literally make you rich, right? That's what I've gotten from a lot of the channels I've been listening to. And speaking of a channel, other than, Erica Williams, and I'm loving this guy, Diamond Dave, right now. Oh my God, y'all. That dude is amazing. And he's so straight to the point. Y'all, if you need to hear like something straight, no chaser, go check out Dave Williams, Diamond Dave on YouTube. But another unsung hero that I want to talk about really quick before I get off is Ryan Ingram. Look him up, you guys, because that dude is giving away so much free game on this cheap real estate situation. I almost want to email him and be like, bruh, why do you have all that game up there? What is wrong with you? And he's not charging a dime for it. But that's what you do. When you get to a certain level, you understand that money is infinite. The Federal Reserve has shown you that. It's just currency. That's all it is, That's all it is. So you just got to figure out what you're going to do with it once it gets into your hands. That's where I am now, right? We got out of California because our dollar simply wasn't going far enough. We got out of California because small businesses like mine that are just starting out, well, unless you pull in a certain amount of money per year, you're going to be upside down if you stay there for too long. There's a reason big organizations are pulling out of California. It's not just about the laws, you guys. It's because their profit margins are deeply affected. Okay. It's because they want to make power moves in the next 5 to 10 years that you don't even know about. But the company knows if they stay in California, they're not going to benefit, right? They know that. That's why they're leaving. Everybody's, pumping up this guy, Elon Musk right now. Everybody's talking about Elon. Yay, Elon. Woo. Y'all, do you understand that the bigger Tesla gets, the bigger electric cars get? Do you understand that probably, I don't know, I would venture to say 80 to 90% of the country still drives gas powered cars? So you're pumping up this person that in 5 years is literally going to make it so you got to go out and buy a brand new car. You probably won't even be able to travel anymore because you're going to have an electric car. Okay. I know it sounds crazy, but that's what I'm talking about. See, you guys think that he's fighting for the people. No, he's not. Okay. The people don't all drive electric cars. Half of y'all online that have posted that he did such a great thing. Do you guys drive electric cars? Are your finances in a place where you can buy a Tesla in a year? Are you ready for the day that maybe gas isn't available for cars, but only available for diesel trucks and trains and airplanes? Are you ready for that day? Okay, well, if you're not, let's take our eyes off of Elon for a second and stop pumping him up so much. Okay. Anyway, I'm not going to get too far into that because I think a lot of times these people are sent to us, as a smokescreen. There's no way that a billionaire is for the people. Just want to tell you that. All right. That's a trick. So I think that we need to focus on our personal economy, because your personal economy is what is going to generate the wealth for your family. Wealth is subjective. Okay. If you want to be healthy, that is wealth. If you want to have a lot of property, that's wealth. If you want to have assets for your children to be able to benefit from when you pass on, that is wealth as well. Okay. So it's different for everyone. And that's why I say the American dream is not dead. It is very much alive, depending on what your dream is. My American dream is not the same as your American dream, right? And your American dream is not the same as your parents' American dream, right? I don't think anybody in my family wants to own, let's say, 5 rental properties, but I do. So our American dreams are vastly different, right? So how dare people say that it's dead? All right. On this channel, you're not going to hear that. I will never tell you that your American dream is dead. Okay. It's alive and well. And you're here listening to me right now. Thank you to everybody that stuck around. If you want to talk to me directly, send me an email at thecreditsolutionist@gmail.com. If you want to speak to me about a specific situation, that is a consultation that you will have to book using the links in the description below. Again, if you don't have the funds to pay for credit repair, and you want to get started, you can get started with us for less than $40 or $49 if you buy all of our ebooks, right? We have ebooks, we have do-it-yourself letters that you can use. Get your journey started. If you have a printer and some paper, you mean to tell me that you're not going to spend, say $20 on some dispute letters that could literally wipe out $10,000 of your debt? Come on, guys. Start using that ticker up there, okay? Anyway, I got to get off of here. I got things to do this evening, but I felt compelled to come on and talk about this. Thank you to the young man that asked me the question on the live stream. I appreciate you. As I said, dollars go down. Interest rates on credit cards and things go up. That is how I believe that inflation is going to affect credit. So pay your bills. Pay attention to your interest rate, but also pay your bills, okay? And be ready to swoop in and ask for a lower APR when the time is right. Hell, ask for it right now if you want to. Do what you do. Anyway, guys, I'm going to get off of here. As I said, I got things to do. All right. So I'll see you guys on the next video. Credit Solutionist out.